Hey there, future finance wizards. Welcome back to Finance Kida, where we break down complex financial concepts into bite sized pieces that are easy to digest. Today, we're diving into a topic that's super important for all you chartered accountant freshers out there: bank interviews, specifically at ICICI Bank. So, if you're gearing up for that big day, grab your notepad because we're going to tackle some common interview questions and give you the answers that will help you stand out from the crowd. Let's get started. First up, the classic question: what do you know about our bank? This is your chance to show off your research and demonstrate that you're genuinely interested in the bank. You might want to mention that ICICI Bank is one of the largest private sector banks in India, known for its diverse range of financial products and services. Talk about its commitment to innovation, like how they were one of the pioneers in adopting digital banking solutions. Highlight their customer centric approach and their efforts in financial inclusion. Also, don't forget to mention their awards and recognitions, which will show that you've done your homework and are serious about wanting to be a part of their team. Now, let's move on to a question that can really help the interviewer understand your motivations. Why did you select the banking sector as your career? Here, you want to reflect on your passion for finance and how banking plays a crucial role in the economy. You could say something like, I've always been fascinated by how banks facilitate economic growth by providing loans and financial services to individuals and businesses. The dynamic nature of the banking sector excites me, and I believe that my skills in accounting and finance can contribute to helping customers achieve their financial goals. This answer shows enthusiasm and a clear understanding of the banking industry. Next, we have a technical question. What is meant by credit? This is a fundamental concept in finance, so be sure to explain it clearly. You might say, credit refers to the ability of a borrower to obtain goods or services before payment based on the trust that payment will be made in the future. It's essentially a way for individuals or businesses to access funds or resources without having to pay upfront. Credit can take many forms, including loans, credit cards, and lines of credit. This answer not only defines credit but also gives a broader context to its importance. Now let's dive deeper into some more specific terms. What is meant by cash credit and overdraft? This is a great opportunity to show your knowledge of banking products. You could explain cash credit is a short term borrowing facility that allows a borrower to withdraw more money than they have in their account, up to a certain limit. It's typically used by businesses to manage their working capital needs. On the other hand, an overdraft is a facility that allows an account holder to withdraw more than their account balance, up to an agreed limit. While cash credit is primarily for business purposes, overdrafts are often used by individuals for personal finance management. This distinction shows that you understand the nuances of banking products. Next up, we have a question that can really impress the interviewers. What is loan grading? You might say, loan grading is the process of evaluating the creditworthiness of a borrower based on various criteria, such as their credit history, income, and repayment capacity. Banks use loan grading to categorize loans into different risk levels, which helps in determining the interest rates and terms of the loan. A higher grade indicates lower risk, while a lower grade indicates higher risk. This answer not only explains the concept but also highlights its significance in risk management. Now let's tackle another important term. What is meant by CIBIL report? This is crucial for anyone entering the banking sector. You could explain CIBIL, or Credit Information Bureau India Limited, is a credit information company that maintains records of an individual's credit history. A CIBIL report provides details about a person's credit behavior, including their loans and credit card usage. It's an essential tool for banks to assess the creditworthiness of potential borrowers. A higher CIBIL score indicates better credit behavior, which can lead to better loan offers. This shows that you understand the importance of credit scores in the lending process. Now, let's get into some financial ratios. What is meant by current ratio, ideal ratio, DSCR, repo, reverse repo rate, SLR, MCLR? Wow, that's a mouthful, but don't worry, you can break it down. Start with the current ratio. The current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations. It's calculated by dividing current assets by current liabilities. An ideal ratio is generally considered to be around 2:1, meaning the company has twice as many current assets as current liabilities. Then move on to DSCR. The debt service coverage ratio, DSCR, measures a company's ability to service its debt. It's calculated by dividing net operating income by total debt service. A DSCR of less than 1 indicates that the company doesn't generate enough income to cover its debt obligations, which is a red flag for lenders. Next, repo and reverse repo rates. The repo rate is the rate at which the central bank lends money to commercial banks, while the reverse repo rate is the rate at which the central bank borrows money from commercial banks. These rates play a crucial role in controlling the money supply in the economy. Then you can talk about SLR and MCLR. The statutory liquidity ratio, SLR, is the minimum percentage of a bank's net demand and time liabilities that must be maintained in the form of liquid cash, gold, or other securities. MCLR, or marginal cost of funds based lending rate, is the minimum interest rate that a bank can lend at, which is determined by the bank's cost of funds. This comprehensive answer showed that you have a solid grasp of key financial metrics and ratios. Now, let's discuss NPAs. What do you mean by NPA of a company? Here you could say NPA stands for non-performing asset. It refers to loans or advances that are in default or in arrears. An asset is classified as non-performing when the borrower fails to make interest or principal repayments for a specified period, usually 90 days. NPAs are a significant concern for banks as they directly impact profitability and asset quality. This answer demonstrates your understanding of risk assessment in banking. Next, we have a question that's crucial for understanding a company's financial health. Explain what is meant by working capital of a company. You could respond, working capital is the difference between a company's current assets and current liabilities. It's a measure of a company's short-term financial health and operational efficiency. Positive working capital indicates that a company can cover its short-term obligations, while negative working capital may signal potential liquidity issues. This shows that you can analyze a company's financial position effectively. Now, let's wrap up with a practical question. How do you check the creditworthiness of a company? This is where you can showcase your analytical skills. You might say, to check the creditworthiness of a company, I would analyze several factors, including their financial statements, such as the balance sheet, income statement, and cash flow statement. I'd also look at key financial ratios like the current ratio, debt to equity ratio, and interest coverage ratio. Additionally, I'd review the company's credit history, payment patterns, and any outstanding debts. Checking their CIBIL report and industry reputation can also provide valuable insights into their creditworthiness. This comprehensive approach demonstrates your analytical mindset and attention to detail. And just like that, we've covered some of the most common questions you might encounter in a bank interview, especially at ICICI Bank. But let's throw in a couple more questions to really prepare you for anything that might come your way. How do you stay updated with the latest financial news and trends? This is a great question to showcase your commitment to continuous learning. You could say, I regularly read financial news from reputable sources such as the Economic Times, Financial Express, and Bloomberg. I also follow financial podcasts and webinars to gain insights from industry experts. Additionally, I'm part of online finance forums and communities where professionals share knowledge and discuss current trends. This shows that you're proactive and engaged in the finance world. Lastly, let's tackle a behavioral question. Describe a challenging situation you faced and how you overcame it. Here you can share a personal story that highlights your problem-solving skills and resilience. For example, during my internship, I was tasked with preparing a financial report under a tight deadline. I quickly realized that the data I needed was incomplete. Instead of panicking, I reached out to my colleagues, collaborated with them to gather the necessary information, and worked late to ensure the report was accurate and submitted on time. This experience taught me the importance of teamwork and effective communication, especially under pressure. This answer demonstrates your ability to handle challenges and work well with others. And there you have it, a comprehensive guide to some of the most common questions you might face in a bank interview, particularly at ICICI Bank. Remember, the key to a successful interview is not just in the answers you provide, but also in how you present yourself. Be confident, be genuine, and let your passion for finance shine through. So if you found this video helpful, don't forget to give it a thumbs up, subscribe to Finance Kida for more insightful content, and hit that notification bell so you never miss an update. Good luck with your interviews, and remember, you've got this. Until next time, keep learning and growing in your finance journey.